We're talking Japan and its influence on the world economy. Let's start by unpacking what has actually happened here. So the recent event is the intervention in the currency market by Japan, but more notably by America too. The first such intervention in about 3 decades. Josh, could you explain what's happened?
Yeah, so Scott Bessent, the US Treasury Secretary, has basically bought an awful lot of yen in order to prop up its value to try and stop it from weakening. There are a couple of unusual things about this. One is that he used euros rather than dollars to buy the yen. The other is the way we know how much yen he bought, which there's a lot about this administration that we sometimes kind of criticize. One thing I adore is the kind of high camp theatricality, and it's just a very theatrical way that we know that he's bought $5 to $10 billion worth of yen because he allowed a photographer to take a picture of his notepad at a cabinet meeting, and the notepad says to do buy Japanese yen brackets JPY. In case anybody missed it, that's the symbol for the Japanese yen. $5 to $10 billion. That's the only thing on the to-do list. Buy Japanese yen, $5 to $10 billion. That's all. I mean, like, you couldn't get more theatrical unless you kind of paid Patti LuPone to kind of belt it from the rooftops.
And this has been a ongoing battle for the Japanese government, which, as I said, America's intervention was new, but Japan has been defending its currency for a while now. So, Ethan, in the context of that, how much did this intervention matter, do you think?
Yeah, it's a good question, Henry. And I mean, I think it's worth saying from the Japanese perspective, this is an intensification of efforts that had already been underway. It came on the back of a $73 billion unilateral intervention just by the Japanese government in May, and repeated efforts by the finance minister and other officials in Japan to jawbone the market to get the yen to cooperate. You know, it used to be that a weak yen was considered a good thing for the Japanese economy. It boosted exports. Japan has a lot of very strong multinationals where a weak yen, improves their competitiveness abroad. But now it's seen as really a problem for them. It pushes up import costs. It's seen as feeding into above 2% inflation in Japan. It's pinching consumers, and it's leading to issues with over tourism, which has become a political issue for the government. So I think the politics here are shifting, and you're seeing that in the way that the government is responding to yen weakness. Takaichi Sanai, the prime minister of Japan, is a longtime skeptic of higher interest rates. She, before becoming prime minister, said that rate hikes were stupid, is the word she chose to use. And her tune has since changed on interest rate hikes as the yen has become more of an issue. That's why it matters in the Japanese context. For America, I think it matters because of the interactions between Japan and the US Treasury market, which I know we'll talk more about later in the show. And then just more broadly for the world, for global financial markets, it matters because of the deep linkages between what happens in Japan and the rest of the world.
So I think step one is saying, why is the yen so weak? And anyone who watched or read our coverage of our Big Mac Index anniversary and refresh a few weeks back will remember that Japan is one of the most undervalued currencies according to the Big Mac Index. So that currency is weak. It's weak in defiance of fundamentals. And that's essentially because interest rates in Japan have been so low for so long. And that's what has made the economy stand out. And of course, if you're an investor, you want to hold a currency where interest rates are higher.
That's right. I mean, Japan for a long time has had deflation as its primary economic issue, low growth, low inflation, occasionally negative inflation. And what that's meant is when you have those sort of economic conditions, you need lower interest rates. So from an investor perspective, that makes it a very attractive funding currency. In other words, you'd like to borrow if there's low interest rates in a country. That lets you take that borrowed money from Japan, finance at a low interest rate, and invest it somewhere across borders and pick up the difference. So that has been a long-standing feature of global financial markets. The question now is, Japan used to have negative 0.1% interest rates, but that's changed. Inflation's back. It's been above 2% for something like 4 years now, and interest rates are rising. They're now at about 1%. The expectation is that the Bank of Japan, the central bank, will hike again to 1.25% sometime later this year. So is that going to destabilize this so-called carry trade?
And essentially, the issue is that this has happened on a massive scale, the borrowing in yen to hold higher yielding assets overseas, not least US treasuries. And this chart shows that Japan is indeed the biggest holder of US treasuries. So this is happening on a large scale, right, Josh?
Right, exactly. And that's why Scott Bessent does need to be worried about Japan. They are such a big holder of treasuries. If something goes wrong, they start to dump their treasury holdings, that would send US borrowing costs up. But it's not just that. Traders call Japan the world's ATM. As Ethan said, it's such a low-yielding currency that you can easily borrow in it and buy other assets. And that goes well beyond treasuries, right? That goes to Japanese stocks, that goes to other Asian stocks, that even goes to US tech stocks. So if we start to see this carry trade unwind, if we start to see, interest rates go up, it becomes more expensive to borrow in the yen, it's not so attractive to use that as your funding currency anymore. You can see sell-offs across the world. And that's why we're asking, can Japan break the financial system? Because it's such an important part of it.
Okay, so that brings us on to the big question. Will Japan bring down the global financial system?
Well, if it doesn't manage the dream scenario where it just gradually kind of unwinds its big carry trade, it could do. And the worrying thing is that we have a financial system that already has points of fragility that have nothing to do with Japan. We have talked to death about how high stock market valuations are, how vulnerable they are to a crash. 2 summers ago, when part of the carry trade was unwinding, but this is tech stocks falling from a very high level. They have much further to fall. They're much more highly valued now than they were 2 summers ago. So that's a point of vulnerability. You have this kind of inward turn already happening within countries, cross-border capital flows reorienting themselves along geopolitical lines. This could be one of those kind of catalysts that really accelerates that. And you can't really predict, if you have kind of this inward turn, you can't really predict what shape the financial system takes after that. So yes, I worry that it could bring down the financial system. I do hold out hope, though, that we just get repeated episodes, like over the past few weeks, this big point of vulnerability, essentially the Japanese government's consolidated position winds down and down and down, and then eventually we don't have it anymore, and that's maybe one problem less for the world to worry about.
Let me give the more optimistic take here, which is that I think even though the position is scary, I think governments are pretty good at crisis fighting, generally speaking. And I think Japan has a lot of levers to pull if something, started to turn pear-shaped quite quickly. I mean, the asset side of the balance sheet, Henry, is one of those levers. A lot of those assets, could be unwound, could be monetized if need be. There is a really significant stock of foreign reserves to defend the currency if they needed to. The August 2024 episode, though it created this volatility, nothing really broke. This was not a GFC or a pandemic style scenario. It was a warning signal, but nothing absolutely dire. And so I think with the levers the government has to pull, the funds available to its disposal, and coordination with its friends in America, I think a crisis situation probably could be averted. But that's probably what people would have said in the 80s before the gigantic bubble burst in Japan. But I think I have faith that governments tend to be good at crisis fighting, even if they're not always good at making good decisions when things aren't in crisis.